Hello, America. I'm Kimil Chandler, and this is Qualitative Listening. Today's headline: the IMF has revised its global growth forecast. Let's get into these Treasury yields. The 3-month is at 4.3%. The 6-month is at 4.2%. The 2-year is at 3.8%. The 5-year is at 3.9%. The popular 10-year is at 4.4%, and the 30-year is at 4.9%. Let's get into the news as of April 22nd. The global and U.S. macroeconomic outlook has become more uncertain, primarily due to escalating trade tensions and rising tariffs. Let's look at the global economic outlook. The International Monetary Fund, or the IMF, has revised its global growth forecast downward, projecting a 2.8% expansion for 2025, a 0.5 percentage point decrease from previous estimates. This adjustment reflects the adverse effects of century-high U.S. tariffs, which have disrupted international trade and heightened economic uncertainty. Advanced economies, including the U.S., Canada, and the Euro area, have seen downgraded growth projections. China's growth forecast has also been reduced to 4% for both 2025 and 2026, attributed to its export dependence amid global trade disruptions. Let's look at these U.S. economic indicators. GDP growth. The IMF now expects U.S. GDP to grow by 1.8% in 2025, down from a previous estimate of 2.7%. This slowdown is largely attributed to the impact of increased tariffs and resulting trade tensions. Consumer confidence. The University of Michigan's Consumer Sentiment Index has dropped sharply, reaching levels lower than those during the Great Recession and early COVID-19 pandemic. This decline is linked to rising prices and economic uncertainty stemming from the trade increases. Manufacturing activity. Recent Federal Reserve surveys indicate a decline in manufacturing activity, with significant drops in new orders and overall business conditions recorded in regions like New York and Philadelphia. These trends suggest increased uncertainty and pessimism among manufacturers. Recession risk. Several economists are raising concerns about a potential U.S. recession. Torsten Slok of Apollo Global Management estimates a 90% chance of a voluntary trade reset recession, citing the damaging impacts of mounting tariffs and small businesses. Adam Paulson from the Peterson Institute anticipates a 65% probability of recession, warning of rising inflation and stagflation due to the current trade policies. Former New York Federal Reserve President Bill Dudley suggests that stagflation is the optimistic scenario, expecting a full-blown recession if tariff costs are passed on to consumers. Financial markets. U.S. financial markets have experienced increased volatility. The S&P 500 declined by 13% in 2025, marking its worst relative start since 1993. Investor confidence has been shaken by President Trump's public criticisms of Federal Reserve Chair Jerome Powell, including calls for his removal. Such actions raise concerns about the independence of the Federal Reserve and contribute to market instability. Alright, that's the show, folks. As always, thanks for listening to Qualitative Listening.